Okay, so what we are looking at right now is the Harmonics scanner. This is 15 minutes on Euro USD Gately. Now, the strategy I want to show us this morning is a strategy that works on 1 hour. It's a strategy that works on 1 hour. It's a strategy that works on 1 hour. So I'm not going to be doing much on 15 minutes. I'm going to just do stuff on 1 hour. I'm not going to take too much of our time. It's going to be just no more than 20 minutes. I'll invite the next educator. Okay, so currently the harmonic scanner have given me a pattern, which is crab here. It has given me the currency pair. The first thing you want to do when it comes to price trap on the harmonic scanner is to see what the harmonic scanner is presenting you. You are not deciding anything. You are not bringing up anything. As fantastic as the indicators are, in this particular strategy, you are not using much of it. You are only going to see what the harmonic scanner presents to you. After you've done that, once you have seen the harmonic scanner, you are going to identify two spots. You are going to identify the roof. You are going to identify the floor. Let me say at this point why it is important you use the harmonic scanner. The harmonic scanner in itself is 80% accurate. The MD CEO of this I Am Mastery Academy uses the harmonic scanner to trade. He's a 25-year veteran trader, and you and I know that he doesn't trade the miserly kind of cash that we are looking at. He trades in millions. So if he's trading in millions and is using this particular tool and is getting the same kind of results, what do you think I want to do? I want to focus on using this same kind of tool so that I can get the same kind of result he's getting. Now, results are not typical, but they can be duplicated. Results are not typical, but they can be duplicated. So what I want to do is duplicate his kind of results. Another fellow I follow a lot is Christopher Derrick, and he's the person that started out this price trap idea. Now, currently, he does very good numbers in terms of trading figures. And if he's doing all of this in 1 month using this same strategy and this same tool, I think it's only wise for me to do the same. So ladies and gentlemen, moving forward, what you want to identify is the roof and the floor. And as much as possible, you want to narrow it down. You don't want to make it too big, too wide, or too, the distance being too much. You want to make it pretty much narrow as much as you can. So I want to start identifying my roofs and my floors. Kindly note, when you are identifying your roof and your floor, the D point on the harmonic scanner is already one of them. The D point on the harmonic scanner is already one of them. And when I say it's already one of them, I'm saying price came to that point and turned back. In most cases, when you look at the harmonic scanner, by the time price gets to the D point, it just turns back. In most cases. So I want to identify my roof and my floor. Now, if you look at what I have on my screen, this is my D point here, right? This is my D point here. So I start by identifying my D point. Now I'm using the body of the candle and the wick of the candle. I draw my two lines around it and then project it forward and back. Now, the next point I want to identify is where price came to in history. When I say in history, in time past, most recent time past, where price came to and turned back. As we can see, price was coming from down here, got to this point, turned back, came to this point, and then turned back and continued upward. So what I'm looking for is this point where price came to and turned back just in a short time. So that becomes my floor. What I've identified up here is my roof, and what I'm identifying next is my floor. So I pick these points. Again, I'm using the body of the candle to the wick. So what I've simply done is identify my roof and floor. Now, if you want to make it pretty fancy, you can highlight it. You can highlight it and then project forward. I will take questions afterwards. Right now, I want to focus on showing you what it is like. Okay, my screen is blurry. I honestly don't know how to make it, or how to change it, make it not blurry. I really don't know. I've been trying it a couple of times and I have no idea how to do it. So please kindly bear with me for now. Kindly bear with me for now. Okay. Yes, I will zoom in, but let's stay focused first. Let's stay focused. If you ask me to zoom in now, you miss the point. I will zoom in, but first you are looking at the roofs and the floor. I will zoom in and I will still go over what I've done. I'll go over it in a bit, but just give me some few minutes. Let me quickly do this first. Now, when you have done this, you have identified your roof and you have identified your floor. What you are waiting for is price to behave for you. You are looking for price to behave for you. And when I say behave for you, I'm saying you want price to move from where it is right now, which is in between the zone. You want it to move outside of either the roof or the floor. You want it to move outside of the roof or the floor. Now that is your target. Once it moves outside, what you are now waiting for is for price to come back to the same one you have drawn. You are waiting for price to come back to that roof or floor as a retest. You are waiting for price to come back to the roof or floor as a retest. When you see that happen, the next thing you are waiting for is a continuation. You are waiting for a continuation. When you see your continuation, you take your trade. Now, this is a market that is currently pending. When I say currently pending, I'm saying we are waiting for it to play out. And I will also do an example on a trade that had already played out so you can see exactly what I'm talking about. So what you are looking for is the roof. You are looking for the roof You want to identify the roof. And then you want to identify the floor. So once you've done that, what you have done is simply trapping the price. You have trapped the price. You have trapped the price. And when you trap price, what you wait for is price to now behave according to the following lines. If it behaves above the roof, you are looking for a potential buy. If it behaves below the roof, you are looking for a potential sell. Now, the harmonic scanner had already called this for a sell. So predominantly, I'm biased towards a sell. It does not mean that a buy cannot happen. It does not mean that a buy cannot happen. A buy can definitely happen. And in fact, I'm looking for a possible scenario. But in this particular strategy, you are not predicting the market. You are only reacting to the market. You are not predicting the market. You are only reacting to the market. So let me quickly look at an example that had already played out so we can have proper understanding. This is also a pending trade on price trap anyways. This is also a pending trade on price trap, Euro NZD. This is also a pending trade NZD card is also a pending trade. USD JPY pending. I will still do some few examples. I'll draw some few examples so we can see it. Okay, so I'm going to use USD JPY. USD JPY. Now at this point D, in history, price came to this point D. Now please note, everything from this point downward you have not seen. Everything from this shaded area downward you have not seen. So you don't know where market is going. You have no idea what the market will do. You have no idea what the market will do. So what I want to focus on is my point D. As you can see, my point D, that's where my focus would be. And I'm going to use the week. Oops. I meant to pick a horizontal line. I'll pick my week and I pick. Now I have the stop loss on the harmonic scanner. So preferably, I will use that stop loss as my second zone instead of coming to use this. Now, if I use this, it's not bad, but it's wide. It's too big. It's way, way too big. And I want something that is going to be pretty much accurate. So forgive me, I'm not going to use that. I'm just telling you from experience, the best thing you can do when you have a wide one that is close to your stop loss or any other zone that the harmonic scanner draws, you use that one. Now, every line that you see on the harmonic scanner, the red, the greens, and the blues, that is the stop loss, the entry line, and the take profits. They are all zones. Every one of them is a zone. Now, I've drawn my roof. I've drawn my roof. I need to now look for my floor. I need to now look for my floor. To get my accurate floor, I need to look in history. I need to look in history. And based on what I have, this was where price came to at some point and then turned back. Price came to this point and then turned back to this point. Price came to this point and then turned back, which is where we have our point X. Price came to this point and then turned back. So I'm going to be using that as my floor. I'm going to be using that particular candle there as my floor. So I will draw from the body of the candle to the wick, and then I highlight. Okay, so I've done my drawings and I highlighted my roof and floor. Okay, I've identified my roof, I've identified my floor. Now what I'm waiting for is for price to behave either way, either break above or break below. Now it danced in between the zones, as you can see here. It danced in between the zones, and then eventually it broke out. Eventually it broke out. It broke out here and then came back and did a retest here. As it retested, it formed a candle above this zone. It formed a candle above this zone and then took off. So here's what I'm looking for. A break above the zone tells me get ready. A break above the zone tells me get ready. Coming back to the zone to retest tells me open your MT4. Make sure your lot size is in place. Now, the final trigger, the final shoot the gun says allow the candle close above the zone. Allow the candle close above the zone. So here's what happened. Price came from down here, from in between the zones. Price came from in between the zones, came out of it, went back and retested the zone. Went back and retested the zone here. And then it now decided to form a candle that closed above the zone, which was this particular candle. This candle closed above the zone. As that candle closed, immediately it closed. Immediately it closed, I shoot the gun, which is I enter in for a buy. I enter in for a buy. I enter in for a buy. Now, your take profit is 30 pips from your entry. Only this candle, only this one candle where you entered from did 43 pips. Did it hit your 30 pips take profit one or not? Yes or no? I want in the chat box, yes or no. Did it hit your 30 pips take profit or not? Awesome. Now, like I mentioned earlier on, remember I said the possibility, even though the scanner called it for a sell, there is a possibility for it to go for a buy. I am not predicting the market. I am only reacting to the market. All right? I'm not predicting the market. I'm only reacting to the market. So even though the scanner called it for a sell, it ended up doing a buy. Will it possibly sell later in future? Yes, it can. Yes, it might. Who knows? I'm not the owner of the market. I'm only a partaker of the market. So I will react and behave in line with whatever market decides to do. I am not predicting the market. I am only reacting to the market. That's the beauty of this price trap. All right. So I've done my 30 pips and my TP1 is out. Now, the interesting thing about this price trap is you and I know that there's a possibility market can decide to go much more than that 30 pips. It can, I've seen a situation where it did 110 pips, 120 pips, 150, 200 pips, 300 pips, and all of that. Now, if I just took only that 30 pips, I've shot myself in the foot. I've not really shot myself in the foot, but I've cheated myself out of the possibility of making more money from the market. So what we do in price trap is we twin trade. We open two positions. For example, now I have an account of, let's say, $1,000. My account size is $1,000. I have an account size of $1,000. What you are expected to do is 0.05 in two places. So it follows to say that if I have $100, I can only do 0.01 in one place. Please note, if I have $200, I can only do 0.01 in two places. And the list goes on like that. So please note, this is only a guideline to help you manage your money. It does not mean that this is the standard. For you to use a 0.1, ordinarily, by standard, you are supposed to have 10,000 in your account. By standard, you are supposed to have 10,000 for a 0.1 in your account. But by virtue of this particular trading strategy, you can actually use 0.05 in two places on $1,000. Now, what you are risking is 30 pips from your entry, which means if the market decides to go against you, you are only going to lose 30 pips. You are only going to lose 30 pips. If market decides to go against you, you are only going to lose 30 pips. Now, that 30 pips that you are losing, that 30 pips that you are losing, if you are on a $1,000 account, will only translate to $15. I want to ask a very specific question. Can you afford to risk $15? And if you lose that $15, will you trade the following day? I want us to put in a yes or no. If you lose $15 from your $1,000 account, will you be able to trade next, maybe tomorrow or next? Yes or no? Will you have confidence to go into the market to go and trade again? Yes or no? Amazing, amazing. So this is the simple beauty of price trap. You are not over leveraging. You are only using minimal lot sizes to give you potential you know, plenty potential trades. So I pick my trades from the harmonic scanner. I pick my trades from the harmonic scanner. I don't look for other trades. Let me explain this to you. I did something recently, and I thought I was guru enough, in quotes. I decided on my own. I don't want to use the harmonic scanner. I decided on my own to go and draw it on naked chart. I did it. It was good. It was perfect. But that trade gave me a drawdown of almost 400 pips. For that particular trade, I was so confident and sure of it. I was using a 0.01, of course, so there's no way it can do so much damage, if you know what I mean. Now, I was so confident of that trade, I just decided I'll do 0.01. I did it. I left it. Kept me in a drawdown for 2 weeks, up to 400 pips. Now, imagine if I had just followed the simple rule. The harmonic scanner eventually called it. And if I had followed the simple rule from the harmonic scanner, I would have probably caught that 370 pips. I would have caught that 370 pips. But because I felt, let me go and draw it, I know how to do it by myself, I went and did it, and you all know the story. It was not a very major figure, but the figure in pips, it has an impact. The figure in pips definitely has an impact. So you need to follow the rules. I am of the opinion, please pick your trades from the harmonic scanner. The harmonic scanner has already done like 70% of the job for you. All you are just doing is identifying your zones, and that's it. You are good. So let's quickly look at another example. And I love this particular example because it did amazingly well. It did amazingly well. Over 600 pips. I think, was it 600 or 900 pips? It did amazingly well. So let me trap. Now remember, we are looking for what had happened in history when price came to and turned back. The first thing is you want to identify your roof and your floor. You want to identify your roof and your floor. I know I've eaten more than the time I thought I was going to use. I didn't want to use more than 20 minutes. Now, I could use this because I need to narrow it down properly, right? So I do my trap. Again, I'm only looking for price to break and retest the zone. Now, as we can see, price came. Now, when I'm saying break, I need to make this very clear. When I'm saying break, I need price to do a proper close outside of that zone. I need price to do a proper close outside of that zone. So I want to ask every one of us on this call. On this candle, did it break? On that candle, did it break? Okay, before we respond, when I say break, I'm saying the body of the candle must close outside of that zone. The body of the candle must close outside of that zone. So on this particular candle, did it break the floor? Did it break it? Did it break the floor? The body needs to close outside of that zone. And since what most of us can see, I believe we can all see my screen. most of us can see that it did not close entirely outside of that zone. There is no clarity in terms of it closing outside of that zone. So guess what I'm going to do? I'm going to wait for a proper close. Now, it came to this point. Did it close outside the zone? Yes. Very tiny, but yes. Guess what I'm waiting for? I'll be looking for an opportunity to retest the zone. Now, the retest going back into the zone happened at first here. Now, for those of us that will say by the time it gets back to the zone, I'll enter in for my sell, it will give you a small drawdown. Or it gave you a small drawdown. It came back to the zone, and then if you had entered from here, it gave you a drawdown of 63 pips. It would have ordinarily hit you out on your stop loss. It would have ordinarily hit you out on your stop loss of 30 pips. So here is what I do. I don't like the drawdown that would probably take me out or even claim my profit. I don't like that drawdown. So I want to wait for a candle that closes again with the body below the zone. It has retested the zone. I want to now see a candle that closes below the zone. And that happened here. So immediately this candle closes. By the next hour, I'm entering in for my sell. I'm entering in for my sell. Now I enter for the sell here, and it gave me a drawdown of 20 pips. It gave me a drawdown of 20 pips, and then let's see how far it went. I'll take our questions, I'll look at our comments, but I want to show us the beauty of this particular trade. Now it closed below, and then we entered the trade, and it did as far as 881 pips. If you were doing 0.05, 881 pips is how much? I want us to put it in the chat box. I'm not going to look at our questions yet. I'm only going to look at the figure that you would have potentially made if you were doing 0.05. How much would you have made from 881 pips on 0.05? 0.05. How much would you have made on 881 pips? Somebody says 400, somebody says 88.1. 88.1, I believe, is 0.01. I'm saying 0.05 on a 1,000. Okay, let's even do the $100. Let's do the $100. $88.1. I mean, $88.1. $88.1. If you had $88.1 on $100, how much have you made? How many percentage have you made? Over 88%. You have made over 88% on that account. Can that 88% that you've just made on one single trade in a little over 7 days, can that pay a little bill? Can that pay some bills? Yes, Manuel, I like your working. $440 on a $1,000 account. Is that somebody's salary? Is that somebody's salary? This is 7 days and 12 hours of holding the trade. Is that somebody's salary? Remember, you have claimed your first 30 pips. You have claimed your first 30 pips. On the compounding, we took this and we did only 216 pips out of this. We did only 216 pips out of this. Now, would that have paid some bills? Would that have paid some bills? Amazing, amazing. So it would have paid a big bill. $440 in Nigerian naira is how much right now? $440 in Nigerian naira is how much right now? 440. Let's even assume the times 380, right? Times 380. 167,200 naira. Is that some good money? Is that some weekend money? Is that some weekend money? Can you manage 167,000 naira in this quarantine time? Can you manage 167,000 naira? Yes, I like Mr. Demola is being honest. I can try. I can try. I can try. I cannot come and kill myself. I will try. I will manage 167,000 naira. Ladies and gentlemen, this is the beauty of price trap. It can give you your dreams. It can give you the kind of money that you want. So at this point, I will take some questions. Okay, somebody says, please, how do you deal with break even and stop profit? Because most times I get hit out on stop profit. Okay. You can never go broke taking profits. That's my opinion. You can never go broke taking profits. So if it hits you out on your stop profit, it's fine. If it hits you out on your stop profit, it's fine. But guess what? If it hits you out on your stop profit, and then it comes back and does the same thing again, like it did here. Most of us that took it here, took it from this first point, it hit us out on the first stop profit. Now, by the time it does it a second time, which it did here, it came back and then closed below. Guess what you do? Enter again. By the time it does it again, and it hits you out on stop profit, if it does that retesting of that zone again, guess what you do? Take it again. I thought I'm sharing my screen. Can we all see my screen? Someone says I should share my screen. Okay, 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 awesome. So I think it's from your end. If you can't see my screen, it will be from your end. Now, in terms of stop profit, I am very particular about stop profit. I don't do what is called break even because I cannot come and work for the broker. I cannot come and kill myself. I will not work for broker. When I open a trade, let's assume this is my entry line. Let's just assume this is where I enter the trade from. This is where I enter the trade from. And then my stop loss, let's assume again, my stop loss is maybe somewhere here. I'm just assuming, no calculations done, just an assumption. This is my stop loss. Now, by the time I take this trade and is in profit of, let's say, depending on the currency pair, I sometimes wait for 20 pips, sometimes 30 pips, depending on the currency pair. But the universal rule is once you are in between 15 to 20 pips profit, please move your stop loss to a profit margin. So here's what I'm going to do. I'm going to change my stop loss by clicking on that trade and then tapping modify. When I tap on modify, I will do what is called stop profit. And I'll explain. I'm currently selling. So how do I calculate my take profit as I'm selling? I want us to type it in the chat box. How do I calculate my stop profit? My take profit when I'm selling. How do I calculate my take profit when I'm selling? How do I calculate my take profit when I'm selling? I need us to type it in. When I'm selling, how do I calculate my take profit? My take profit will be below. My take profit, not stop profit. My take profit. How do I calculate my take profit when I'm selling? EP minus number of pips. Thank you, Infinix. That's what I'm looking for. Thank you, Infinix S5X. That's what I'm looking for. EP, my entry price, minus my number of pips when I'm selling. If I'm buying, EP plus my number of pips. So I'm selling right now. I'm going to now be subtracting, let's say, 30 pips from my entry price to give me my take profit. Simply put, I will do the same thing, but this time I will now subtract only 2 or 5 pips. I will do the same thing, but this time I will now subtract only 2 or 5 pips, as if I'm calculating a take profit. It's as if I'm calculating a take profit. So once I've done that, whatever figure I get, I put it in my stop loss. So let's take a look at this. Let's take a look at this. My entry price based on this particular trade would have been this 2.0 whatever here. My entry price would have been this EP equals 2.03633. Now, I'm going to subtract because I am selling. I'm going to subtract because I am selling. And I'm looking at calculating 5 pips. 5 pips. I'm not doing 10 pips. I'm not doing 20 pips. I'm not doing 30 pips. I'm first of all doing 5 pips. You would have put in your take profits and all of that before now. Right now, you are only putting in your stop profit. So I'm only going to subtract 5 pips from my entry, which is going to give me 0.00050. I hope we all understand what I'm doing. And my result would be, those of us that know math, I beg, help me. If I'm wrong, help me. 2.035 13 minus 580. So this becomes my new stop loss. This figure that I just got is what I will now go and put on my stop loss. I'll just impute it as my new stop loss. Now, once that is done, let's now assume this is my stop loss here. I've clicked on modify and I have that figure already. I'll change that figure to 3580 and I click on OK. It's almost the same thing on your MT4. Once you've done that, that stop loss will move from wherever it was to the new point where you have just put it. And with that, if market should ever turn against you, ever, it will deliver to you 5 pips. I cannot come and work for the broker. I believe that answers our question on stop profit. I believe that answers our stop profit question. Okay, so a lot of times, most of us do 2 pips, but depending on the trade, I do 5, depending on the trade. Okay, so I'm not supposed to take on the class of calculating stop loss and stop profit. That would be for another session. It's always in the beginner's class. And for those of us that were on the call yesterday, we had it with one of our top educators, a phenomenal individual. I also learned from this person. He's amazing. He's an amazing educator. He's a phenomenal friend, turned brother, OC Josh. He took it yesterday and a lot of us got value. Now, if you also want to get more of this in terms of calculating your stop loss, your take profit and all of that, you can go on your I Am Mastery Academy, watch this series 100 to 400, and then move on to bootcamp done by Manny, move on to bootcamp 1 to 8. I think he handled this particular take profit and all of that in bootcamp 3, but I don't want you to just focus on one particular one. I need you to watch everything. If you can do this, that is watch 100 to 400 series, bootcamp 1 to 8, and you do it, let's say 2 times, let's even be very minimal, 2 times. I tell you this truth, your trading will not remain the same. I'd like you to give it a try. Just don't take my word for it, just give it a try. Okay, the place of trailing, as I've changed my stop loss now, if it moves like this, let's say it moves 100 pips, I want to move my stop loss. It has moved 100 pips, I'll move my stop loss. I'll be following it. It has moved 150 pips, I'll follow it again. It has moved 200, I will follow it again. All you are just doing is, you are saying, the more it goes, the more you are trapping, you are, fixing some profit for yourself. The more it goes, the more you are fixing some profit for yourself. On this particular trailing and stop profit, I need you all to watch that boot camp done by Manny. It's very helpful. It's super explained there. I need you to go back there and watch it. Please, I'm begging. One class may not do it, but repetition, doing it over and over and over again, will get you to that point. So ladies and gentlemen, at this point, I don't want to take us too much further. I want to hand over back to my coach and mentor, my phenomenal person, my personal person, and I'm going to still come and chop some cake.